Good morning, Paul Georgie from Allendale. It's May 14th, 2010. Well, the focus today is again on the dollar. The euro currency is the key issue here this morning. The euro currency is down sharply. Dollar index is up 38 as we speak. That carryover is causing some pressure in the crude oil market, down 92 as we speak. The crude continues to have huge delivery stocks against the futures contracts, or available to deliver against the futures contract, and the contango that's developed in the crude oil, where the nearby contract is lower than the deferred contract, is causing more buildup of inventories. That attitude, or that development in price, is causing more pressure in the nearby crude contract. And the gold market sharply higher, up $17.50 this morning as we do this report, right around the $1,250 an ounce price. A lot of gold bugs this morning are talking about the idea that we could see a setback in the gold, and I think we have to. We've had a sharp rally. A setback of anywhere of $100 to $150 in the gold would not be out of the question. So how does that going to affect the grain markets? Well, initially, with the dollar being up sharply, we are lower in the grains. We'll probably open up lower and lower pretty much across the board, with the corn 2 to 4 lower, beans anywhere from 8 to 10 lower, and wheat 2 to 3 lower is where they closed here at 7.15. But corn, July contracts got initial support around the 367.5 area. Then again around that May low of 362.5. So those are some key numbers we got to deal with here today, especially on a Friday, with resistance all the way up at the 380 area in the July. Other news factors, newsworthy items. China said it will sell some more of its reserve corn, about 1.4 million metric tons next week. About half of that in the north and half of it in the south. But they did admit and confirm yesterday that they're only going to sell the corn to feed meal producers, so it's not going to be able to go out and be hoarded by speculators, and this corn also has to be processed within 30 days. So they've got some pretty good stipulations on it in trying to curb the high corn price and the tight corn supplies that they're having in China right now, which, if those sales go well, we'll have to watch that very closely. They may need to come back in and buy some more corn from the U.S., and that should provide some support for corn as we go forward here. In the soybeans, the weak dollar is the dominating factor there. Lack of investor confidence. May futures go off the board here today at 12 noon, so anybody that has May contracts on, make sure you get out of those before 12 noon. The key technical support in the July soybeans is 947. Watch that very closely. If we break through that, close below that, could open the door for a move all the way down to the $9 area in the nearby contract. Wheat, it's just hard to find anything beneficial to price there. Beneficial to production in Australia. They've got some good rains and widespread rains going into the wheat growing areas there. That should help that crop out considerably, which again puts more supply in the world balance sheet. The livestock trade, we've had some good news this week. Cash cattle traded stronger, up to $1 in the south, up to 163 in the north. However, we've seen a slowdown there and a change of direction in the beef cutout values. Yesterday's choice was down 126, select down 79. This is causing some anticipation that will be lower in the cash trade next week. Right now, you'd have to anticipate a dollar lower coming into next week on the cash side of things. The futures had a sell-off yesterday, and this morning early calls are anywhere from 10 to 20 higher in the cattle, but we think that rallies here today are going to be short-lived, and you probably look at those as selling opportunities as the market appears to have put in a seasonal high here in the cattle trade, and especially in the beef prices here on the short term. In the hogs, the strength in the dollar is causing tremendous pressure there because of the anticipation that we're just going to stop selling pork if the dollar continues to be stronger. And there's still some problems that need to be worked out with between Russia and China yet. Those aren't all a warm and fuzzy situation as we'd like to see it. So that's slowing down some demand for pork. We've got prices that have moved sharply higher. Technically today in the June hog contract, we've got support around the 84.15 area, and then really major support down around 83.35. If we take that out, that would certainly turn the charts negative, and I think you got to watch that as a key to which direction you want to trade the market from. So if you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We'd be happy to answer any questions you might have. We wish you a successful trading day. We'll talk to you on Monday morning.